Hello, everybody, and hello, Las Vegas.
What?
We're not in Las Vegas?
No. I don't think we've ever been to Vegas either, have we?
I thought I did, but I can't remember. Anyways, welcome to Chapman True. So if you guys have never been to this channel before, we're Chapman True, and we invest in real estate, among other things that we've done over the years. That's what we're doing right now. So what we try to do is we have this channel that we made in order to kind of let you guys know what we've done right, what we're doing wrong, so that you can maybe do it yourself and not make the same mistakes that we make and do it flawless. In 2035, go through every single video that we have, and you'll be able to do any project flawlessly. That's a guarantee. 2035 on today's date.
No,
check it out.
I feel like that's
Guarantee.
us in some trouble.
Guarantee. 2035. It's gonna happen. I'm guaranteeing it. You can have my 2014 Xbox if you don't do it flawlessly after watching all our videos in 2035. Here we are. So I guess you would go to someone that asks you what you do for a living, and you say, I'm a real estate investor, and they have questions for you. They're like, how do you do that? What, you have how many properties, and how do you finance that? Do you have to have cash? How does that work? Well, today we're going to talk about an FAQ, a question that people have for us, and we'll discuss more specifically what is a hard money lender, because that's how we get lending on a lot of projects. There's hard money lenders, there's traditional mortgages, and there are private money lenders. But today we're going to specifically talk about hard money lenders so you have a better understanding of how that works. So I guess the first question is, what is a hard money lender?
So a hard money lender is a lender who's going to loan on distressed properties. They will charge you a little bit of a higher fee, but they are a lot easier to work with, and they get the job done. So they are going to allow you to close on a property that a conventional lender would not typically close on. So if you're missing a kitchen and a bathroom or the floor, or I don't know, was one of our first projects with the whole back of the house was off, there's no way a conventional lender would have ever given us a loan on that. So hard money lenders specifically work with real estate investors to get deals done.
So that's how a hard money lender differs from, a traditional mortgage or something like that. Well,
Yeah.
good to know. I'm learning so much right now. So now that we know what a hard money loan or a hard money lender is, what are the advantages of getting a hard money loan versus, a mortgage or something like that?
Yeah, well, I mean, just like I said, they work with people like us. They allow us to purchase distressed properties where normal lenders wouldn't let you. But the great thing is they can close really quickly. Some lenders can close in 5 to 7 days. Others might take a little bit longer, but they can close super quick. They're usually easy to deal with. They typically lend on the deal itself. So they're not gonna be asking for a whole bunch of personal information like when you go and purchase a conventional home where you have to give a sample of blood and your firstborn and write 3 essays. It's not like that.
Yeah, we lost a good one that way.
Yeah. So the advantages are that they're easier to work with than a typical bank. They're gonna lend on the properties that you're trying to buy if you're a real estate investor looking for a fix and flip. They can close, and they can close fast. So those are the major advantages to using a hard money lender.
Okay. Chugging along, we know what a hard money lender is. We know advantages of a hard money lender, but what are some potential disadvantages of using a hard money lender versus traditional mortgage?
Well, they're expensive. So they're giving you fast, easy money. That also doesn't come cheap. So typically we've had hard money go anywhere from 9.5% to 13.5% interest only. So, and that's just what it can be higher, sometimes it can be a little bit lower, and then there's additional fees on that. So they're gonna charge you points. Every lender will charge you this. So a point is a percentage of the total loan amount. Sometimes it's 2, 3, can be even higher, and then they also have their lender's fees. So it definitely is costly to have a hard money lender. So that is definitely one of the disadvantages of working with them. But if you're in this business, the advantages definitely outweigh the disadvantages of being able to get a deal done, because if you can't go through a conventional lender, hard money is the next easiest way. There are other ways. There's private lenders and there's other different loan products out there. But specifically today, we're talking about hard money lenders, and really they get the job done super fast.
Now we know what a hard money lender is, and we know some disadvantages, we know some advantages. But if I want to find one, how actually do I find a hard money lender?
So how do you choose a hard money lender? Well, first you have to figure out who they are. So get out there, start networking, go into Facebook groups. There are tons of real estate investor Facebook groups that you can connect with people. Go to your local real estate investment meetups. You can get a lot of good information there about hard money lenders. But you can also just do a Google search and you can check the backgrounds of the company on Google. There's tons of there's a sea of hard money lenders. So just do your research, figure out who's gonna work best for you. Start getting on the phone and calling them, asking them what their terms are, asking what their rates are, and what their pre-approval process looks like.
Right, because not only will you find hard money lenders, if you're new to it, you'll learn a lot as they're saying these terms, and you go back and you'll Google some more and try to figure out what that term meant, or ask one of your buddies that are already in the industry.
Yeah, and don't be afraid to ask questions because it can feel very confusing when you're starting out with hard money. So they're gonna only lend you up to a certain percentage of the after repair value of a house. They are going to lend you a certain amount of the rehab, a certain amount of the purchase price, and all of these things you're gonna need to have a general understanding of because that also determines how much cash you're gonna need for the project. So don't be afraid to ask questions to your lenders. Ask them how this works, what does that mean as you're going through the process to make sure that you really understand it.
So with hard money lenders, their risk is not on you personally. So how do they make sure that they get their money back? How does that work?
Well, I will say that a lot of hard money lenders are going to make you sign a personal guarantee. There are very few that won't. Some will check your credit score just to get a feel for who you are and how you handle money. Some won't. So those are things to factor in, but they really do lend on the deal. So they're only gonna lend a certain amount up to that project value. And they're also not going to give you your full rehab budget at one time. You may find somebody to upfront all of that, but what we found is you do it on something that's called a draw, where you complete the work and then they give you money. So they always have the upper hand in the situation to where they are gonna make sure that they don't have more in the property than they could just take it back and sell it for if they needed to.
Right, so you're saying that they come in and they have a lien on the property so that if you don't pay it back, they get it back. But they'll only lend on what percentage of the property so that they know they can most likely get their money back unless there's some crazy crash that's never happened before in the history of the United States.
And so that's really good to ask your lenders, because some right now, because of what happened in the 2000s, they are starting to restrict a little bit. Some are only lending 65% of the ARV, some are lending 70%. As you build relationships, we have 2 lenders right now that'll lend us 75%. But typically that comes with doing deals. So if you're just new getting started, I would set your expectations to 65 to 70% of the ARV is what you're most likely gonna be getting for your loan terms.
Right, so if you have a property that it comes in, it's costing you $100,000, and most likely they're gonna let you borrow $65,000 on it.
You're not costing, the after repair value is $100,000. Then they'll only lend you $65,000. So when you have it all buttoned up and beautiful, they know that it's gonna be worth $100,000. If they're lending you 65%, they're only gonna lend you $65,000 between the purchase price and the rehab.
So if you found a deal that was potentially $65,000 for a property that was $100,000 after repair value, you could get into it for very little or no money, correct?
It depends, and this is where we get into lending terms. And this is where it's important just to start asking those questions, because some lenders will let you go the whole way up, but some will also still want you to have a certain percentage of the purchase price skin in the game.
Right, so those are the kind of questions that you need to be asking when you're talking to these lenders and figuring out what's the best for you, because most likely you will have to have some amount of cash to go into a project. And you need to know what you have available versus what it's going to cost you in the end, because those kind of things add up. Those are called hidden costs that a lot of people don't know about as they're getting into these deals, or they're sending us deals. And they say, hey, this is a great deal. And we say there's actually thousands and thousands of dollars that you are not factoring in there in these costs, and it's actually not a great deal. So these are the kind of things you have to learn in order to get into good deals.
One good example is I just looking over a deal we analyzed. We're actually going to close on Monday, and we're going to be giving over 6 months a hard money lender $52,000. And that does sound like a ton of money. However, it's an amazing deal, and we're going to do really well on it. So all the numbers work out to where it really makes sense for everybody involved. So just keep that in mind when you're looking at properties. Now, this is a higher property, so don't say, oh my gosh, this is how many. Sit down and work your numbers and understand those things. But if it works, right? If the numbers work.
Right. So don't fixate exactly about how much they're making, how much they're making, how much they're making. Just focus on what you need to make in order to be happy yourself and work your numbers back from that. And if everything works out, then everything works out. And if it's not enough margin for you, then obviously you have to keep on moving. All right, we've talked about what a hard money lender is. We've talked about the advantages. We've talked about the disadvantages. We've talked about how to find a lender. But now that you've found this selection of lenders, how do you choose which one is going to be best for your project?
Well, that's really going to be based on your personal, what you have going on, because some lenders, if you put a little bit more skin in the game, they're going to give you a better rate. Other lenders, they may lend more, but their rates are going to be higher. So you just have to look at everything that you're being offered and make the right decision for you.
So after you've learned all this information and you've talked to the lenders and you have a short list of who you're going to use for these projects, what are some of the things that you should do, or at least one thing that you should do before getting into the project, or before you have said, hey, we want to make a bid on this? What should you do for the lenders on your end?
So it's going to be really important if you're a brand new investor that you're starting an LLC, because I have not met a hard money lender that will lend in your personal name. So you want to make sure that you've got an LLC set up and that you're ready to go, and then also that you're getting approved. So just go to a lender that you feel the best about and say, hey, what's the pre-approval process looking like? And a lot of times they'll also give you a pre-approval letter. So you can use it just like you would if you were going to buy a home. You can say, I'm pre-approved up to this amount, and it helps you make stronger offers, because pretty much every agent is going to want to verify that you're able to close the house, and that is your essentially proof of funds. That's what I mean. That's
right.
the word.
So either you have the money in the bank, or you've got this letter from a lender saying that they're going to give you the money so that everybody can move forward at a fast rate, because that's how these things move. They move very quickly.
Yeah, so go out there and get your LLC if you don't have one already. Start talking to lenders, get pre-approved, and then start hunting those deals.
So hopefully we reach that one person. If you're that one person, in the comments, say, hey, I'm that one person. You help me. You help me become a better investor. You help me just flip some properties. Be that person. Let us know. Thank you guys very much for hanging out. If you guys want to get other knowledge so that you can do flawless flips, flawless investments, go ahead and like, subscribe, share, get notifications from our channel so that you know when other great stuff comes up that you can help you be a great investor in this world of investing. So thank you guys very much for hanging out. We'll see you guys next time.